Stack Hodler, welcome to the show.
Thank you, Stephan. It's good to be here. Thanks for having me.
Yeah, I have been enjoying some of your Twitter insights, and I thought this would be an interesting conversation, obviously, just to get a bit of your views on what's going on around the world in a macroeconomics sense and from one Bitcoiner to another. So obviously, don't dox anything about yourself, but do you want to just give us a little bit of your, at least what you're mainly interested in from a Bitcoin perspective?
Yeah, sure. So I'm, like you're saying, I'm an anonymous investor in the Swiss Alps, surrounded by cows and beautiful vistas, etc. But I've been posting on Twitter, I'd say like the last 6 months, mainly about the big macro stuff. So as the price is plummeting and people are freaking out, I kind of like to just take a step back and say, all right, what is the bigger picture here? What is actually happening, and how does Bitcoin fit into all this stuff? So I've been focusing on that, and I think people have been finding it a nice way to kind of take their mind off the price. So that's what I've been focusing on, the big macro stuff.
Yeah, for sure. And as I read you, you're more like it's more like fundamental analysis around just looking at the news and how that plays into, let's say, the Bitcoin thesis, right?
Yeah, I mean it's exactly that, and I think I saw a tweet from Zero Hedge the other day, and I think it kind of sums it up. But they were saying like, look, there's so many crazy things going on in the world right now, we can't even keep track, right? And so if Zero Hedge is saying that, then you know that just some crazy shit's going down. So I've been trying to just honestly just stay on top of it and form my own understanding of what's going on. Always with the question of, how does Bitcoin fit into this? Does this change the thesis at all for investing in Bitcoin? And really the answer is kind of no. It's this whole time we've been seeing crazy thing after crazy thing happen. And I always ask myself, like, is this going to lead eventually to more liquidity or less liquidity? And ultimately, I think the liquidity will return. And I think most of us at this point see that, if you care about the Bitcoin price, it's really a reflection of liquidity in the system, right? So we kind of just have to monitor what's going on, what's eventually going to, you've heard this phrase a lot, but break and ultimately lead to more liquidity entering back in. So that's what I've been focusing on, and that's everything from movements in fiat currencies and debt markets, and tracking various entities that look like they might be on the verge of blowing up and things like that. End of the world stuff, all that stuff. So that's what I've been paying most attention to.
Yeah. And so, as you were rightly saying, there's so many different things going on. Perhaps the challenge then is figuring out what's actually the signal here in all of the noise. So, what
Yeah.
what kinds of things are you looking at as the important things to pay attention to?
Yeah, I mean, well, certainly like fiat currencies would be one of the first places to start. I think the big story has been, this whole time we were like, what's going to be the best store of value when inflation hits? Well, okay, we've had like amazingly high CPI prints, and what's the best thing to hold? Well, funny enough, it's been the dollar, right? The dollar has been absolutely murdering pretty much every asset and every other fiat currency, really. Maybe not the ruble, but we can get into that later. But I think the big story has been this dollar strength, right? And you've seen some people, taking victory laps, saying, "Haha, all you idiots thought the dollar system was going to die, and here we are, dollar stronger than ever, and every other fiat is failing." And I think that's fair. I think the dollar milkshake guy, Brent Johnson, I think is his name. He
Yeah.
deserves so much credit for calling this out. I mean, he was on this. He understood how the system works, and when there's a demand for dollars because there's all this dollar denominated debt, the dollar is going to be the thing that performs best. So kudos to him. But one thing I would say is like, look, this dollar strength really is, in a way, it's its weakness, because what it's doing is it's incentivizing every economy in every country around the world to find a way to get off this dollar reserve system, right? I mean, if it's crushing all of these economies, emerging markets, etc., that's just the biggest incentive in the world to find something else to trade in. And I think that's what we're starting to see. That's been a huge thing happening, and we can talk more about that later as well. But the other fiat currencies I'm keeping my eye on are, number two and number three, which are the euro and the yen. And I think, a lot of people have talked about the yen at this point, but just giving a brief overview, it's been like a lot of fiat currencies. It's been getting crushed against the dollar. It's lost something like 36% of its value in the last year. And that's really just a signal of the debt crisis that they're in. I mean, you're talking about Japan as a country with something around 250% debt to GDP. and they cannot let 10-year yields rise above 0.25%, which is just it's pretty insane, because if it rises past that point, then essentially their economy implodes. And the reason for that is they have all of these conservative Japanese debt holders, people like pension plans, insurance funds, things like that, and they hold tons of Japanese debt. And any decrease in that value is essentially going to make them insolvent. So their economy can't afford yields to go above 0.25%. And so as the Fed has been raising, it's essentially just been putting pressure on Japan and on those 10-year yields. And the Bank of Japan has had to step in and change their policy to, okay, they're already doing yield curve control, but they would kind of do it selectively as needed. But now they're at the point where they're like, look, we will buy unlimited Japanese government bonds daily, with yen printed from the sky. And frankly, we don't give a damn if the yen is devaluing. All we care about is that we don't go past 0.25% on the yield. So that's pretty crazy. I think seeing that it's almost like looking into the future of all of these central banks, whether it's the ECB or the Fed, because they're all kind of in the same problem, right? There's too much debt. There's no hope of paying it off through growth. And at the end of the day, what's going to suffer is going to be the currencies. And so with Japan in particular, the thing that I find very interesting there is they are the largest foreign holder of U.S. treasuries. So really, they have like 1.6 trillion in U.S. treasuries, and so if they can't let rates rise above 0.25%, and the result of that is the yen getting crushed. Well, they can keep that going as long as inflation doesn't get too bad in Japan. But if it does, and then there's popular demand for them to change this policy, one of the only things they could do, one of the only moves they could make at that point, would be to start dumping U.S. treasuries en masse at the same time that the Fed is talking about doing quantitative tightening. So that's not a situation that the Fed wants to see happen. So would the Fed essentially at that point step in and say, hey, like, why don't we help you buy these JGBs, these Japanese government bonds? They might do that, actually. So then you get almost like Fed quantitative easing for Japan, which is kind of crazy. But yeah, so there's just this large amount of U.S. treasuries that let's just say they did sell that, and they just kind of dumped that on the market. You would have the point where then the Fed is suddenly looking at massive yields skyrocketing, and they might actually be at the point where they have to start doing yield curve control too. So that's Japan. I can stop there for a second.
Yeah, sure. And I think, so just to walk through some of the thinking there, as you were rewinding a little bit, as you were saying, if US rates rise, why is that putting pressure on the Japanese bond market? Is that basically because the competition in terms of for investment, now more and more people are going to try to buy USD and get into USD bonds on the margin, which sucks away people who are buying, otherwise would be buying Japanese government bonds. And so that's causing this dynamic that you're explaining, where basically the Japanese institutions, the central bank, has to enter the market more and print more.
Yeah, I think that's very well said. And I think that's what you're seeing, not just in Japan, but, in Europe with the euro as well. It's like you look at comparative, anytime there's like a policy divergence between these central banks, the one that's raising rates is the one that's attracting capital. And so that's it applies the pressure on all these other central banks to raise rates and try to keep pace with the Fed. Because if they don't, exactly what you just said happens, and it draws capital over to the side that's raising rates.
And it's a very unfortunate scenario, but as people have been saying this for a while, is that the world is going to look like Japan, basically. Like, if we want to get a sense of what our future is for those in the Western world, it's going to look potentially like Japan does, which means an environment of low growth. I'm not sure what Japanese corporate tax rates are, but I know their personal income tax rates are relatively high. And so this is also another bad factor, right? Because if you're an individual in those countries and you're looking down the barrel of paying 55% tax rate at the top rate, then it's just not looking good for you.
Yeah, no, absolutely. It's not. I think, the world turning Japanese, we haven't even had to wait long, because look at Europe, right? I mean, I actually didn't look at the news. I think it came out an hour ago, but today so for the first time since 2011, they're actually raising rates, which let's give them a little round of applause. Raising rates to 0%, very impressive, from negative 0.5%. So that whole story was kind of funny, actually, because they came out, what was it, like 1 or 2 months ago, and they said, all right, we're seeing the euro get completely decimated by the dollar. It's time for us to make moves. We got to try to keep pace with the Fed. And yeah, we're going to start raising rates too. And what happened? Yields went from zero or negative and just completely shot up. And it freaked them out, right? Like they saw yields, Italian yields, German yields, all the yields going skyward. And 3 days later, so they had a meeting, and then 3 days later they had an emergency meeting. And in the emergency meeting, they basically discussed like, okay, how the hell are we going to raise rates without completely blowing up these debt-laden countries, right? Like Italy with 150% debt to GDP. Like, how are we going to raise rates without sending them into a debt crisis? And so they came out and they said, okay, good news, guys. We came up with this brilliant idea. It's called an anti-fragmentation tool. And bottom line there is central bankers are amazing coming up with silly names for money printing. It's the same damn thing, right? Like this anti-fragmentation tool, it's going to let them raise rates. But what they're doing is they're going to be buying Italian bonds or basically buying the bonds of the pigs, the bonds that are going to end up shooting up higher because, they're higher risk countries. The ECB is just going to end up buying those, doing a form of yield curve control, just like Japan, at the expense of, say, the northern countries like Germany or the Netherlands. So they're going to be robbing Petr to pay Paolo. And it's probably not even going to help that much because actually, one last thought, and then I'll stop here. But I was thinking, it's interesting because in Italy right now, you can expect. All right, so if they're helping bail out the Italian bond market, it's going to come with some strings attached, right, from the ECB. So you're going to have this supranational entity, the ECB, trying to dictate fiscal policy like they normally do, but they're going to be trying to do that to a sovereign state like Italy. And it's at an interesting moment because, once again, Italian government collapses, what's new, but it was Mario Draghi who was a central banker and he's out now. The question is like, who comes in after him? And if you have the ECB dictating, tighter fiscal behaviors, does that lead to sort of a populist movement of potentially Italians wanting to exit the EU? So one thing I was just thinking about as I was thinking through this stuff.
Of course. And so as people have been saying for years, many, even Austrians such as Philip Vargas has written about the tragedy of the euro and pointing out there's just this systemic flaw. And we've seen, obviously, with Brexit occurring, are there other countries who are starting to look for the exit doors? And then that also could be a big problem in the case where debt is concerned, because there's always that question then of who's taking on debt for which one, right? And where does the debt go, and what does that mean for the EU breaking down? Of course, that might be some time away, but these are the actions that are leading towards that. So the other interesting dynamic as well in Europe is that there are a lot of depositors who are just sitting there getting owned by negative rates. And that's just been the reality for years now. So I'm curious what your view is on those depositors and why they're staying in the ECB Euro banking systems.
Yeah, I mean, that's a great question. Why are they doing it? I would assume it's just it's a form of momentum, right? They don't really know any better. And a lot of people don't really think about these things too deeply unless it gets really acute. And I think if they enter a situation like Japan, where you're seeing an aggressive, again, the yen, 36% loss against the dollar this year. Euro has been crushed as well. I think you might start seeing people start questioning that, hopefully, I would imagine. But at the same time, I mean, it's us Bitcoiners, we are in a bit of a bubble, and I think it's easy for us to assume that people will figure it out. But we're talking about questioning, sovereign debt. In most people's minds, sovereign debt is like the safest thing. And even if it's negative yielding, like, okay, I'm willing to pay to hold these bonds because it's the safest thing I can hold. So I think breaking that, I don't know how that happens. And I think there's probably a lot more trust in the EU and ECB amongst your average investor than you and I might think or hope, So I don't know. It's a good question. I'm not sure why they would do it. Certainly, it seems a bit masochistic on their side.
Yeah, of course. I mean, look, the obvious answers are, in some cases, they may be a regulated institution with no other choice. In other cases, it's the momentum, as you said. And in some cases, it's just that they don't see that they have an easy way out because from their point of view, if you're a fiat person, you might just be thinking, oh, well, I can't easily get a bank account somewhere else. Okay, what if I have these European bonds from their perspective, because that represents sort of like future euros, and maybe the idea is, okay, I'm going to, again, I'm bending over backwards here to try to steelman the case, but it might be like, okay, they're seeing it as like future euros. And I understand for some people who are, let's say, bond bulls, part of the case that they would make, obviously I disagree with them, but again, they see it like, I'm holding these USD bonds because that represents future dollars, which I can use in the time of a crisis to scoop up some cheap things on, cheap property or cheap businesses and accumulate things on the cheap to get a good deal. Or
Right.
it may be for systemic reasons that they hold a lot of USD bonds because they don't have any other easy way to store value, because let's say the deposit guarantees at various banks only go up to, let's say, 250,000 or 100,000, depending on that, if we're talking about high net worth and people with a lot of money or institutions. And in that case, maybe that's why they're holding a lot of bonds. So I'm curious, do you agree, disagree with that, or have any reflections on that?
Yeah, no, I think that's all accurate. It's hard to say. I don't personally own any bonds, so it's hard to put myself in those shoes. Just knowing that we're at the end of a big debt cycle, and ultimately it's the debt holders that are going to get crushed. I think ultimately we're going to reach the point where the only people that want to hold or that hold bonds it's going to be the group of people you mentioned. It's the ones that are forced to, right? It's going to be the pension funds that have a certain forced allocation, and they're just going to have to, take the loss essentially. But uh, yeah, I mean, the other thing you can say is I can see the appeal of, okay, now that rates have gone up to, let's say, around 3%. Um, maybe I can see the momentum trade. It's like, okay, maybe if I buy at 3% and it goes back to zero, then the value of those bonds is going to shoot up, and then I can sell them at that point. But I think, holding to maturity, knowing that the currency that they're denominated in is going to be printed to oblivion, I think that that's just kind of silly. So I don't know. I do think a lot of people probably look at them just as trades at this point. But yeah, you can also make the argument that, hey, look, if I live in Europe and all I care about is euros, then I'm happy to hold these bonds. Yeah, it might be worth a little less in the future, but at least I'm not taking on any currency risk, or I'm not going to buy Bitcoin because it's too volatile and I'm a retiree and I just want to be guaranteed X amount of euros in 10 years, right? And so maybe that's good enough for them. So yeah, I think those are probably all valid reasons.
Yeah, sure. And I think maybe to some extent we're just underestimating the inertia, because I'm sure there are a lot of people with just basically no knowledge of this. They just do their normal job, and as part of that, some money goes into the pension fund, and that could be a government requirement in many countries. That is the case, and unknowing, to them, that fund holds some allocation in stocks and bonds, and that's just and that's where a lot of them. A typical allocation, obviously, the 60-40 stocks and bonds is a common thing. Other funds have different allocations of stocks around the world and maybe some, a bond component. And reality is that they're the people who are holding bonds without really even knowing it, and maybe not having that much control over what precisely is in that retirement account. So maybe that's one component of it. And I think the other interesting part, and as you mentioned, I think it is that question of who takes the loss, because that, I think if we look historically, I think in most cases, it's the debt holders, the bond holders, who are the ones who get wrecked. But what's the possibility on the other side that if, for argument's sake, if, let's say, governments start to default the honest way as opposed to the inflationary pathway? I'm curious if you have any thoughts on that.
Yeah, then I think everybody takes the loss in that case, right? Like if you're talking about default and they just let everything collapse, then okay, you're talking about a depression, right? And in that case, it's pretty much everybody collectively. I mean, people who have enough cash in that case will actually be in the best shape. Um, but collectively, I mean, people aren't going to be able to get jobs, and it's a complete disaster, right? And so, I mean, there's various ways though. There's various ways that they can handle things. It's not. They can also, create huge amounts of taxes and tax the wealthy, and sort of confiscate wealth. That's another way that somebody could take a loss. So no matter what asset you hold, but let's say you have a net worth above, I don't know, 10 million or whatever the number will be, maybe you're going to have massive confiscatory taxes. And that's one move that the government takes. But I think historically you see various moves. Typically it's, the currency loses in the end. They debase the currency and they try to get money flowing again. But in the meantime, they might try other things as well, austerity, large taxes, etc. So yeah, you kind of want to be prepared. And I think originally one of the reasons we connected on Twitter was this idea of how do you prepare for various economic environments. And, at the time, I think this was in like November, we were tweeting similar things, but there was this whole like GetOnZero movement in the Bitcoin community. And I was, I think, and I think you were too, we were kind of cautioning people saying like, look, like, yeah, this is great. It's great to get on zero when everything's going up 10, 15% a day, but it's not so great to get on zero when they actually are tightening and assets are selling off and we're in a deflationary spiral. And suddenly the only thing that everybody wants is cash, right? And in that case, you really want to have a cash cushion, and you want to make sure you have cash flow. And that's personally how I like to invest. I like to think about, okay, what are the various stages of the economy that we're going to go through, and how can I make sure I'm not like stressed out to the max during any one of these stages. And I think I like having mostly Bitcoin and with a sizable cash cushion, and then also some gold. And we can talk about that if you want. I hold gold reluctantly, basically, but I do hold some.
You're a shitcoiner? Nah, whatever.
Yeah,
but
exactly.
I think the interesting, it is the comments around GetOnZero, because I can understand the view, which is, oh, look, on average, Bitcoin is going up and you should just, maximize that. But I think when you put it into practice, there are various steps and things along the way that might stop you. So, quick example, what if you're running a business and, or if you have staff to pay, you have certain liabilities that are just in fiat, in USD or whatever other fiat, that can be difficult. Or if you have, let's say, a big lump sum payment coming due in, let's say, 6 months or 3 months, well, you're not going to go all into Bitcoin and then have to, at the worst possible timing, if you had to, let's say we had this big drop from, let's say, 69,000 at the top down to, call it 17,500-ish at the bottom recently, which we hit maybe a month ago, at that point, if you had to pay a fiat obligation of $10,000, you're paying over half a coin. Whereas, I can certainly appreciate where there's a little bit of a need to balance the cash cushion aspect with and the other important point to consider is, what if you lose your job, right? Because if you lose your job and there's a Bitcoin bear market, then you're just getting like double whammy negative on both sides. So I think that's where probably my principal disagreement with the GetOnZero movement is. And of course, I wrote articles and I did podcasts about that too. But I think, of course, I'm I'm very highly allocated to Bitcoin, but I don't quite believe it makes sense to go zero. But that's kind of how I'm seeing it. What do you have any other reflections on that?
Yeah, same thing. I would just put an emphasis on the, at the bottom of a deflationary spiral. So if, God forbid, they let it just go all out into a depression, I mean, that's when it's going to be hardest to have a job and have cash flow, right? And that's the moment you would have to sell Bitcoin. Let's say you lose your job, like, okay, you're going to sell at the very bottom. That's like a worst case scenario, right? So you just that's a non-zero probability. So you want to make sure you're insulated for a moment like that, right? So I think that's just the logic of it. And then the other thing is like, look, like, great, hold the majority of your wealth in Bitcoin, fine. When Bitcoin goes to where we know it's going to go, then the extra fiat you have, that will be, it's not going to be worth a ton at that time, but your Bitcoin's going to more than make up for that loss. So that's kind of how I think about it. I don't mind holding some fiat as a way to just sleep well in moments like this. And if it ends up being, worthless one day, then I know the Bitcoin, it's gonna more than make up for that loss. So that's totally fine.
Yeah, right. So also curious to get your thoughts on the credit cycles component of this, right? Because I think that's another thing that comes through in some of your threads, and I think you wrote one as well about this idea of why people are selling, and people who sell because they have to and not because they want to. So could you elaborate on that idea?
Yeah, of course. Yeah, so I think first of all, you have to understand, like, when we had negative or 0% interest rates for so long, like for 10 years plus, everybody and their mother is taking out debt, right? Like, money's free. We saw it on Twitter all the time. It's like, oh, take out debt, buy assets. It's all free money, right? Why not do it? Well, that's all well and good, but then if they do start raising interest rates, then the next thought in somebody's mind who's holding debt is, crap, I'm not going to be able to service this debt at higher interest rates. So what I should do is, let's say I bought assets on leverage. I should probably sell those assets at this high price now, pay back that debt, pocket the difference. I made some profit, no worries. But as they're doing that, the asset prices start to fall, right? And then more and more people are looking at their balance sheet and they're saying, well, actually, I have all this debt. I should probably sell some assets for cash too. Or I'll move into, something like bonds that seem safer that I can sell at a later point. And so that's what happens. It's like people are essentially selling assets to be able to pay this debt. Now, in the meantime, if you're sitting there and you don't have any debt and you have cash flow and you have a cash cushion, so all your short-term obligations are covered, you have zero reason to worry at that point, right? Because you don't have to sell an asset at a depressed price. You can kind of ride it out. But I think the thing to know is like the way these credit cycles typically end, at least at this stage in the big debt cycle, which is when we have tons and tons of debt in the system. Essentially, what happens is eventually there's some leveraged entity that has tons of debt, and they're a massive entity, and they end up coming close to default, or they actually default. And at that point, essentially, central banks have to slam on the brakes, send rates down to zero, print a bunch of money, and then bail out that entity that has the bad debt. So basically, the two things to know are like, number one, just have enough cash and have a job like during that deflationary period where you don't have to worry and sell assets. And don't take on too much debt, so you're not one of the people that's like scrambling to sell assets. And then number two is just be positioned for when that turnaround comes. You're holding an asset that, number one, can't be debased like the currency is about to be, and number two, I mean, this is what I love in particular about Bitcoin is this is so important, but you want to hold stuff without counterparty risk, because at that moment when you have, let's call it a globally systemic institution close to default, that's the moment of maximum risk, right? And that's when you want to hold something that doesn't have that counterparty risk. So that's the way I think about it. That's thinking about credit cycles that way. It helps me wait until that moment. It's like, okay, something eventually is going to break. So all you have to do is make it through to that point.
Right. And so as Bitcoiners are very naturally bullish on Bitcoin and therefore bearish on a lot of fiat, as you're saying, that it takes time for this cycle to play out, and in the short and maybe even medium term, certain fiat currencies will do well. Like the US dollar, obviously, objectively, has done well in that short to medium term, because maybe we've seen this dynamic of high inflation countries where they are running to the US dollar. So Argentinians are running to the US dollar because they've seen this movie before. They've seen it every few decades or every decade.
Yeah.
So they sort of have that cultural, I guess, knowledge that they might just go and do that because they saw their dad do it or their granddad did it. And other countries are doing that. And so in a sense, the US and the USD and US government bonds, they have a lot more bag holders around the world just because things are priced in USD and people run to the USD, at least in the short and medium term. Of course, long term, we see everyone's running to Bitcoin. So it's kind of an interesting question for a Bitcoiner about how to navigate these waters when it's kind of like a short-term bullish for USD moment.
Yeah, and I think one of the other interesting things to understand there is like, yes, people are running to USD because it's the best performing fiat. There's also the aspect of, well, there's so much dollar denominated debt around the world, and there's not actually that many dollars. So once that debt, people are scrambling to pay off that debt. It's just a race for scarce dollars, right? And so that's just driving demand. So that's a global phenomenon too, right? Because you have this euro dollar market where, without getting too crazy into the details, like some other podcasts I've heard, basically you have all of these loans that are offshore that are denominated in dollars. But the banks that made those loans, they can't issue dollars, right? So like, if people are trying to pay those loans off, they're going to have to try to sell assets. And really, there's just a scarce amount of dollars created in the US that everybody kind of has to fight over. And so that's why you see the Dixie shooting up and all these other fiats getting destroyed. And then one of the interesting things to think about is like, when do you have hyperinflation, right? Like when do these credit cycle busts end in something like a hyperinflation? And typically it's when you have a lot of debt in a currency that you can't print. And so that's why you see it in places like Argentina where, okay, they might have a lot of dollar denominated debt, but they can only print pesos. And so that's a situation where you're going to end up printing pesos and you're not actually going to get that much closer to paying off your debt. Same thing happened obviously in Germany. They had to pay. I think their debt was in gold, right? But they're trying to print Deutschmarks or whatever they were at the time, and so that's what happens there. But typically, if you can print your currencies, so let's say the U.S. or Europe, you have a lot of debt, but you can print your currency. Typically, they can manage without causing a hyperinflation. I think that's probably a mechanism that a lot of Bitcoiners aren't familiar with. Is just like when these credit cycle deflations happen, when you get a deflationary period, essentially what's happening is like credit's being taken out of the system. And so if these central banks start printing a bunch of money, they sometimes can actually balance it out, right? Like they're putting money into the system, but there's money being taken out in the form of credit. And so that's kind of like it's a complicated fiat mechanism that doesn't always make sense intuitively. But as long as you can print your own currency, you can sometimes avoid that hyperinflation pretty easily.
I see what you're saying. So it's sort of like saying there's two countervailing forces, and of course, in all of this, the population is being raided, right? They are absolutely being raided. It's just that the government and the central bank are potentially able to benefit in some sense because they're able to print enough that they can take command of the real resources out there in the world, because they've managed to print while this credit deflation was occurring. Or they were able to, let's say, bail out the politically connected, as we saw with 2008 and 2009, where they were basically bailing out the politically connected while letting the everyday people suffer. And I think I'm also curious to get your view on this as well, because there's been a view, I think, for some time in the investing world about, okay, it's the long run, right? Like, oh, just keep buying equities because it's just going to go up in the long run anyway. And, and people might even make the historical examples of, oh, look, 2008, there was a big drop, but in 2009, it was a big relief recovery. So if you sold out then and you weren't in 2009, you missed all that, that recovery juice of equity market gains. Do you see that as a trap this time? Or how are you looking at equities, and how, will people get tricked? Basically, the question I'm asking is, will people get tricked by pattern matching off what happened last time?
Yeah, I mean, the short answer is I don't know. I don't know. I don't want to say, this time's different or anything like that, because I don't know. But my gut tells me it's actually not different this time. I think that it all comes down to, in my opinion, it all comes down to like a liquidity play. And I think that, equities are going to be more scarce than the fiat flood they're going to send our way. So anything that's denominated in fiat will probably go up over time. To me, I'm like, okay, well, I want to hold the thing that's going to reliably go up the most. That's why I'm more interested in holding Bitcoin than equities. I mean, I have nothing against equities, honestly. Like I think it makes a lot of sense. I wish we lived in a world where equities were priced fairly and, you could make smart, intelligent investments. But one thing that's interesting though is I think you can kind of make the argument that people treat, at least in the U.S., but well, actually, I guess around the world, but people treat the S&P 500 index kind of in the way that Bitcoiners would love people to treat Bitcoin, right? They treat it as a store of value. So everybody knows, like, okay, don't just put cash in the bank. You're gonna lose long term. So just buy, an index and don't think about it. And I think that's kind of the message that Bitcoiners would love people to adopt about Bitcoin. And I think, we see the advantages of Bitcoin over something like the S&P 500. Now, to Steelman, their argument, they would say something like, equities are backed by cash flowing businesses. There's real, property, plant, and equipment on the ground. There's tangible things tied to these equities. But on the other hand, we could say, look, like Bitcoin is more portable. You can take it with you to any country. You can self custody it. It's not in any one jurisdiction like the United States, where if Saudi Arabia buys a bunch of S&P 500, do they get it seized one day? Like, that's just not a thing with Bitcoin. And honestly, tying yourself entirely to the future of the United States, I don't know if that's something I'm comfortable with these days, given the debt situation. So, but I do think it's interesting how people treat the S&P 500, and it's actually reacted pretty well during this at least this initial drop. Now, does it drop further? I think one of the things you're alluding to was like, well, like when a bubble pops, people are in the buy the dip mentality, and the S&P 500 goes down in price, and it still looks appealing, right? It looks appealing to buy because in your head you're thinking about the earnings that are projected for all of these equities. But eventually, what happens is like that initial bubble bursts. people lose a bunch of wealth, so their portfolios get smaller, and when that happens, people naturally just spend less money. And when they spend less money, eventually that leaks into the earnings. And once those updated earnings with less, the lower earnings come in, then the share price typically will fall after that. So yeah, people who buy the dip can kind of lose at that point. But I think ultimately it's probably just gonna once the money printer turns on, all of this stuff goes back up again.
Right, yeah, it becomes more like a stock melt-up situation.
Yeah,
Even if the price-to-earnings ratios are getting into crazy levels, right? Because historically, they've
yeah,
been, at much more lower levels than they are today, but they can definitely just get back up there. So another angle that was interesting is this whole idea of mortgage boycotts. And maybe this is touching on a little bit around that idea of who takes the loss, because there's been a little bit of news coming out of China with, let's say, certain, I think, residential mortgages where people were just basically boycotting because I don't know the full detail, but as I understand, there were some property developers who went under and stopped building the buildings. So then the people on the other side who are with the mortgage are like, well, I'm not paying that then. So I'm curious,
yeah.
uh, do you have any thoughts on what the implications of that will be? Like, will we see that in other places?
Yeah, I would imagine the implications are pretty big, but I don't know. One thing I do know is that I posted a couple things about this on Twitter, and pretty quickly I'll get replies from not bots, but they look like accounts that are maybe funded by the CCP. So that's an interesting thing. It's like it's telling me that clearly they don't want me talking about this. So I'm going to talk about it anyway. Essentially, they have the Chinese real estate market. It's massive, right? It's the largest single asset class in the world. So bigger than U.S. equities and U.S. Treasuries, et cetera. It's like $60 trillion in size, this market. So it's massive, and it's where Chinese people store their wealth, right? Like they store their wealth in real estate instead of like the S&P 500 index. But the thing is, like a lot of this is not even necessarily finished real estate in the sense that people are buying kind of these concrete boxes and these giant towers, and nobody's really living in them. It's like they made some money, they need a place to put it, and so they'll buy, quote unquote real estate, but half the time it's not even hooked up to electricity. So it's kind of just like it's honestly it's a crappy storehold of wealth. Is these people needed a place to store their wealth, and some concrete box is what they all kind of collectively settled on. But yeah, and so there's been, I mean, a lot of people listening to this probably remember this whole Evergrande default situation last year. One of the largest property developers in China defaulted on their debt last year, and turns out there's a whole bunch of these developers they were over leveraged and ran out of money, so they're essentially insolvent at this point, and they don't have any money to finish these projects. But then the weird thing is, in China, they do this thing where you start paying your mortgage on your apartment before you even have the apartment. Right? So the apartment doesn't exist, but you're paying a mortgage on it, which is kind of crazy. But now people are realizing, like, okay, there's no way our developers are going to be able to finish this project. So why don't we just stop, like you said, why don't we just stop paying the mortgage, right? Like it's a form of protest. So apparently there's 301 projects in 91 cities that are now seeing these protests pop up. And the crazy thing is, it's not even just the mortgage holders now. Did you hear about the like the suppliers as well?
Oh no, I didn't hear about this. So they're doing this also.
Yeah, so essentially, it's these suppliers that they were supplying raw materials to the developers, and to make the supplies, they essentially took out loans from the bank as well, and now they're refusing to pay back their bank loans. So they're like, look, Evergrande stopped paying me, so I'm going to stop paying you. So at the end of all of this is these Chinese banks, and they're holding a bunch of bad debt, basically. So who loses? For now, it's the Chinese banks, but like any big bank, the government's probably not just going to let them fail. So what's really going to happen is China's going to have to do, I mean, most likely, in my limited knowledge, they're probably going to have to do some form of a bailout. But it's a very, very tricky situation because, if you do a bailout, do you encourage other people to stop paying their mortgages? I mean, if this is a widespread problem, that could kind of encourage that behavior. And they have their party Congress coming up in the fall, so they want to avoid all bad optics, and this is certainly not great optics.
Yeah, it's fascinating to think about because there's so many different angles of how things could go. But as you were saying, at the start, it's the banks who are taking the loss, but then eventually in many cases, and not endorsing this, but just neutrally recognizing what are the likely or possible outcomes. If the government does a taxpayer-funded bailout, well, then taxpayers are paying. If the government prints, well, then all currency holders are getting debased. If they do a bail-in, then the current depositors of those banks get wrecked. So it's kind of there's someone somewhere is going to wear that loss of the non-performing loans that have been made in these overly exuberant times, and so it's really just pointing out that there's really not any good options or nice ways this is going to play out. And unfortunately, there have been, from an Austrian perspective, there have been malinvestments made, and the only way out now is to liquidate them and have those resources go elsewhere. And so that's the unfortunate reality of what's going to happen. And it may not just be restricted to China. And I think maybe the broader point here is that people were using properties as their store of value. And perhaps there's also a cultural component to this as well. Like from when I talk to Chinese people, as well as I understand, it's seen like if you are a man looking for a wife in China, you need to have a property and a car. Otherwise, you're a loser kind of thing. So that maybe
Right.
there's a cultural component of that over time, because it's seen like, oh, property is the way, property is the thing you do. And in various countries, this exists, this property culture. So this whole culture of using property as your store of value, maybe that has to change, and people will slowly learn to use Bitcoin as their store of value.
Yeah, I hope it does change, and I think that storing your wealth in a concrete box that doesn't have electricity is far from ideal, right? And for various reasons that Bitcoiners know well, but how much liquidity are you going to be able to get out of that in the future, especially with the demographic situation of China? Uh, it's not exactly divisible. It's not super portable. Not that Chinese governments want you to have your wealth be portable, but yeah, it's far from an ideal store of wealth, and it is probably, yeah, it's a cultural thing, but it's nice to know that now there is this thing called Bitcoin that is just it's engineered as a store of wealth, right? And I think about it often, and how grateful I am to hold it, right? The fact that I can take my wealth with me anywhere around the world, no government has a say over it. That it's truly an empowering feeling, and the more you think about it, the more you just kind of fall in love with this asset, just from a practicality standpoint. And then the other thing I would say, and this is far more speculative, but if we're talking about what are the how does it play out, and what are the consequences of this, I would say that it's in times of internal struggle that countries often lash out externally, and we obviously know that China has their sights set on Taiwan. Uh, is this the type of distraction that would maybe speed up that timeline? That's something I would keep my eye on. But I think certainly if they have some form of a real estate collapse or a banking crisis before the Party Congress, they might want to deflect by invading Taiwan. So hopefully that doesn't happen. But that could also be something that this leads to.
Right, and it's these times in history when the extremist leader can come up and say the things that agitate the population and direct their anger and ire at somebody else, and then use that to, as you said, distract from the problem. So we're
100%.
also seeing this idea of the BRICS nations, right? Brazil, Russia, India, China, etc. Some of these other countries who are almost trying to make moves outside of the US and the Western nations to sort of do their own thing instead of the Western world thing. I'm curious if you have any thoughts on these shifting alliances.
Yeah, I think it's one of the most interesting things happening in the world right now. And again, it's one of these signposts of, okay, if I see this happening, how does it make me feel about my Bitcoin investment? It makes me feel pretty damn good because it's like things are changing in very unpredictable ways. But holding a neutral reserve asset that can't be debased or confiscated, I think it's a perfect time for that. And I think that ultimately these nations are going to be looking for something like Bitcoin. But right now, what they're doing is they're in the process of, again, going back to one of the original points I made, they're in the process of figuring out how to get out of this dollar system, right? The dollar reserve currency has been, bad and good, but it's been really bad for a lot of these countries. And in particular, they don't like the idea of the U.S. bailing themselves out every time by printing a ton of money and then turning around and buying scarce, commodities with that printed money. So why should the U.S. have the advantage of just being able to print oil, essentially? And so we heard words like that come out of Putin recently. He was essentially saying, me and all these other countries are done with trading scarce commodities for infinite paper. I think it comes down to that. Now, one of the things I find most interesting is it's crazy to hear all of these things being said just, in the broad daylight, right? Because in the past, I don't know if you remember, but, Gaddafi wanted to set up a sort of a pan-African gold-backed currency to replace the US dollar on the continent. And, well, we saw what happened to him. He ended up in a ditch, murdered. So I would say that the fact that these countries are so emboldened to be now openly talking about ditching the dollar is a pretty huge signpost. And they are just out in the open, making deals with each other in various currencies. I saw a deal between Russia and India for oil being paid in, oddly enough, UAE dirham. I've seen Turkey and Russia talk about trading and using the Turkish lira. But that's a funny one to me, right? Because that makes me laugh. It's like, okay, Russia wants to stop accepting dollars, but they're going to accept Turkish lira, which is, it's garbage, right? So ultimately, I think, yeah, maybe they'll accept Turkish lira, but they're going to want to convert that pretty immediately into something that's, a lot more scarce than that fiat currency in particular. Or if they hold Turkish lira, like, okay, now you have this coincidence of wants problem. You got to hope that Turkey has stuff that you want to buy with their lira, right? So it's interesting to watch them step through this logic, and what they're ultimately going to end up on will be interesting to watch. But yeah, I mean, what are your thoughts on the BRICS and all this stuff that's happening?
Yeah, so the way I'm seeing it is that they will only have limited power to try to change away from the US dollar. Of course, we wish they would go straight to Bitcoin, but we know Bitcoin is perhaps a bit young and a bit small for that right now. The current market of Bitcoin is something like 450 billion. It's not even half a trillion as we speak today.
Right.
Of course, it will grow. It's probably not at the size yet that some of these larger nations could realistically go into Bitcoin openly, at least. And so I think we will see some of these countries try to make moves to at least build their own alternatives. Like there was this whole, like with the whole Russia-Ukraine war, there were moves and discussions about alternatives to the SWIFT payment network. So yeah, they're going to try to build out their own little payment networks. But I think in terms of denominating contracts, that might be difficult in a world when people are running to the USD. So it'll be interesting to see what happens with that. Maybe they'll try to make more of like commodity plays. Yeah, I guess I don't have any special insight into what the BRICS would do though. So yeah, I think at the end of the day, it just comes down to enough people being patient and recognizing, like, if you're a Bitcoiner, just having that patience and not expecting everything to happen tomorrow, because there will be times when Bitcoin takes a dump, right? It takes a drop, as we've seen recently with Tesla. The news came out recently that they sold 75% of their Bitcoin. So even companies and large, companies who are buying Bitcoin may be in a position where they have to sell it, and so that's just part of the reality. And I think for Bitcoiners out there, whether you are an individual or part of a company, or part of it is about being financially in the right place and stable enough that you can actually hold on to your stack, because you don't want to become a forced seller is probably the key idea.
Yeah, I would agree. That kind of sums up my recent feelings probably best. Just real quick back to the BRICS though. Uh, we're seeing, so like you said, Brazil, Russia, India, China, South Africa. Well, we're seeing other countries talking about joining as well. So this is kind of a growing coalition. And yeah, they're not going to be able to move away from the US dollar immediately, but they are starting to denominate some trade in various currencies. But some big movements here are Saudi Arabia is talking about joining, Argentina and Iran, and I think I saw the UAE as well. So these are large countries, and there's two things to know about them. Number one is a lot of them have commodities that are needed by the Western world, and so that right there is a source of real power. Right? It's not fiat debt power like the West has used. It's real power because you need these commodities to function in the modern world essentially. So they can wield that power over fiat indebted countries. Um, and then yeah, I mean, and then the other thing is, like, they're also large holders. A lot of these countries are large holders of foreign exchange reserves. So in particular, U.S. Treasuries. So like Saudi Arabia, their whole thing for a while was we'll sell oil in dollars and then we'll store profits in U.S. Treasuries. Well, the big thing that's happening there is that's now changing. If you look at treasury flows from Saudi Arabia, they're actually selling some and not buying any more U.S. treasuries. So they're, I think what happened was like Russia, $300 billion in foreign exchange reserves were frozen by the U.S. and Europe in Russia. And I think all of these countries were like, okay, well, that pretty much put an end to that store of value, right? And so when you think of the US dollar, you can't really separate it from the debt that underlies it. And if there's not demand for that debt, public demand for that debt, then it's essentially going to have to be purchased by the Fed via printed US dollars, a la Japan. So that is kind of the thing that I'm also keeping an eye on, is like, how do these countries stop? China also, I just saw a headline that China fell below 1 trillion in holdings. So they're kind of letting their US treasuries fall off as well. So these are big, huge changes, right? Like into how the world trade works and what's being used as a store of value, et cetera. So those are things I'm keeping an eye on.
Yeah, so in a way, we could maybe summarize it as the different countries and governments around the world are just going to have to engage in a lot more money printing. So it's just money printing around the world is almost the theme that we've been talking about today, because they are getting pushed into increasingly this, they're in between a rock and a hard place, that they're in a bad situation, and arguably, the least bad thing from their point of view is to print. And so that's what they're probably going to do. So I think that's essentially the view. If you're looking out in the world as an investor, as a assessing at the macroeconomics of it, it's to see that they're going to have to print. And so we all have to think, what are we going to do in response to that? Well, what things go up when they're printing? Well, as you mentioned, it's things like equities, maybe a little bit of the property market, but also we think Bitcoin is going to be the actual long-term sustainable answer here. So I'm curious your view on that. And I guess from your perspective, why would you see Bitcoin as the longer term answer?
Yeah, for me, it's pretty simple. It's the finite 21 million growing network, more people being aware of it, versus the infinite fiat that we know is essentially going to have to debase over time to take care of this debt problem. And that is also growing in awareness. People are figuring out like, oh crap, these fiat bonds are not the ideal place to hold wealth long term. There's this thing, Bitcoin, that's finite. That also, I think, going into a world of more chaos, less cooperation, you really want this neutral reserve asset that sort of steps back from all of these conflicts internationally. So I think that, to me, that's why I love holding Bitcoin. I love that it's finite. I love that there's no counterparty risk, and I love that it's outside of any one jurisdiction. To me, that it makes it stand apart. Maybe it's there with gold in a way, but we know how much easier it is to use Bitcoin, and how much more portable and divisible, et cetera, it is. So that's why I love Bitcoin, and that's why I think it's the thing to hold long term.
Fantastic. Well, I think that's probably a good spot to finish up. So any final closing thoughts for people out there, or and also where can people find you online?
Yeah, I would just say stay solvent, stack sats, and be patient. Like Stephan said, things can take time to play out, and expecting Bitcoin to go straight up to the moon is probably not the expectation to set for yourself. But if you set your expectation of, I'm going to hold this finite asset that has zero counterparty risk, and in the meantime, maybe I'll hold a little cash cushion so I sleep well at night, I think you'll be in great shape. So if you want to follow me, Stack Hodler on Twitter. And thanks, Stephan. This was really fun.
Fantastic. Thank you.